Hello, Josh.
Happy Tuesday, Richard. How's it going, man?
Good. How do you like my new background?
Yeah, I'm digging it. I kind of feel left out. Maybe maybe
I sort of
next
feel
week
like
I'll
I'm
have that
floating in
installed.
space.
Yeah. Yeah. I are you still do you have the books behind you? Is that what I'm looking at
The
still?
books are behind me. Yep, you just
Oh,
can't.
that's crazy. That's
It's pretty crazy, isn't it? Ground
we're
control to Major Tom.
yeah, we're recording on a Tuesday, man. It's a holiday week. Tuesdays are not usually when we record. You gonna just stay in town with the family? You have any crazy holiday plans?
Um, we're hunting for turkeys for the
Are
first.
you really?
Yeah,
That's awesome. Awesome. What is that tomorrow?
we have a backup plan.
Yeah, yeah, hopefully. That's awesome.
Yeah, we're staying
My
home.
family, my lady's family, everybody has been split and divorced. And so with my mom, dad, her mom, dad, and then extended family, this week we have 6 Thanksgivings to be a part of. So I've got enough groceries here to cook 6 Thanksgiving meals. It's chaos. I cook the same dish. I'm a specialist, man. I cook the same dish just 6 times.
All right, that's
Yeah, man.
efficient and
Yeah, yeah, exactly.
works with our culture of specialization,
Yeah.
one which
Um,
I was never comfortable.
I
Hey, a
am
lot's
going.
been happening since we last talked.
You're not lying. I will start us off with something. Maybe usually we start with the temperature check, but I thought this was worth maybe just spending a couple of fun seconds on. We don't have to stay here long. Um, Last week or a couple of weeks ago, we saw a world record and a winner for the biggest lottery prize ever. I think this has hit it's gotten over $1 billion 5 times, maybe the last 5-ish years. This was by far the biggest win. I guess $2.4 billion, man. I think my question is like, Richard, I don't know if you play the lottery, but let's say you won this thing. Do you do the monthly installments or do you do the one-time check? And then what changes for you, man?
I would probably do the monthly installments and nothing changes for me. I would fix finance, man. It's like, it's so absurd, the financial world we're living in right now. And I mean, I don't play the lottery, so I don't have any chance of winning the lottery. So it's sort of a moot point, because I think the mathematics of lotteries is what I'm fighting against, basically.
Yeah.
Um, it has a terrible expected value.
Mm.
And yeah, you want to put $1 into it, something that you're perfectly, willing to just count as entertainment cost. Nice, right? But thinking about what you do with it is like starting to participate in the dream, that has really, demolished
Mm.
millions of people now and
Totally.
continues to demolish millions of people every day.
Mm.
We live in the extraction economy, and this is exactly how the extraction works. It's the lottery all over the place.
Mm.
This is why we have FTX and Sam effing, Bankman F,
Yeah.
SBF, you know. So yeah, I would do exactly what I'm doing today, just more of it.
I am not surprised by that answer. I don't think you'd be surprised if I said I would change maybe everything. I mean, you win this thing lump sum. It's almost $1 billion. I don't know if I would definitely change a handful of things that I've got going on. I think I'd get out of the location, probably help the family out, do some things like that. But this, like you said, mute point. I thought it'd be a cool spot to get the ball rolling. My I usually start us with the temperature check, and let me run you through some facts, and then I'll ask how you're feeling. Last couple of weeks, we've seen some shifts in the market. S&P to date, year to date, down 17.6%. The Nasdaq 30.3% year to date. Bitcoin and Ethereum 65.5 and then 70% year to date. the maybe silver lining here, and I'll share my screen with you again. The silver lining here is this hopeful inflation report that we saw a couple of weeks ago. And this shows CPI was up in October 7.7% compared to 8.2%. The stock market, I mean, with this news, responded with the best showing, the best one-day showing since 2020. The S&P was up 5% last week. I think I'm just giving you details, trying to paint a picture here. My question is just we're wrapping up November, heading into Thanksgiving. I ask this every couple of weeks, man. How are you feeling?
Terrible. I feel terrible. I feel very angry. I think that rally last week was a joke. It was a short squeeze, piled on with the market makers, and it's not sustainable. 7% moves in the NASDAQ are not good, up or down. That's way out of whack. It's not good. It's not a positive. It's a negative. It means we're in more brittle markets. It means there's much more volatility. You're up 7% in a day. Unless you're a buy and hold investor, it messes with your mind. It's very destabilizing. It's very disorienting. And you don't know how to respond to it because it's like a 10 standard deviation event. It's not supposed to happen. So meanwhile, that's the tools of the trade of the financial industry to extract good, going back to our extraction economy theme, to extract money from the weak hands who get, mentally disoriented during this kind of volatility. You're like a deer in the headlights, and now you're, did I miss out? Is it time? Is it too late to get back in? Starts messing with your head, messing with your psychology, and it just makes you a sitting duck. While the snipers are there taking out the sitting ducks left and right, and then you have FTX.
I'm getting there.
It's not good. It's really corrupt.
The call out, the one liner you had at the top of that is, I think, so important. It's something I'll echo of just, if you're in this and you see, if you owned the S&P 500 and you see a 5% swing, I think the initial gut instinct is like, hell yeah, 5%, yes. But a 5% or 7% swing in something that is supposed to be as stable and consistent and in either direction is a really scary thing. It shows lots of high volatile times. That's an awesome call out. That hadn't flipped in my brain, and that's a really good call out.
To be able to pay attention to its effect on your ability to sustain a strategy long term in the markets, right?
It's awesome.
And for the most part, it's just, it puts you in a chasing frame of mind, right? Especially if you were like out of the markets, waiting for this to happen. And now you're, I missed it. Is it, I got to chase it now. So it sets up just bad psychology. And that's, in my opinion, kind of what the system is designed to do, to put the most people into a weak psychological state. So that's, the more knowledgeable and experienced and risk savvy participants can monetize that flow.
Over the last couple of months, you and I have, I'm going to show you this. This is from your website, or from your newsletter, actually. Over the last couple of months, this idea of like seasonality and maybe even cycles is something that we've been exploring, and I think subconsciously or unknowingly, I've slowly started to drill into this, or I've slowly started to find some things with you, just following your work. And in September, we talked about and we proved with some data how September is historically the worst investing month, and we showed some data supporting that. October, you brought up sort of organically in conversation the Halloween indicator, and that's something that we explored a couple of weeks back. This go around, you had a few call outs around Thanksgiving. This shows the full week. I had one more screenshot that just gave a little bit more data of all other weeks compared to Thanksgiving week. And I don't want to steal your thunder here. This is packed in your newsletter, but I was just going to ask you if you could maybe share a little bit about this finding and how you unpack this. Again, I'm doing my best to tee up the question without stealing the thunder.
Well, kudos to Dr. Barton. I put that slide back up for a minute. So Dr. I've known Dr. for 20 plus years. He's phenomenal and really great guy. Thrilled to have him on board with us as our chief investment strategist. And yes, this is I've mentioned before, seasonaltrader.com was the first financial website I ever made. And this isn't from that. This is from Schaefer's investment research, but the facts are the facts. This is data driven. And this week has a higher average return than other weeks. That's what you see there, 0.54 versus 0.16%, right? So that's great. But what's really great here is that the standard deviation or the volatility is about the same, right? So higher reward, lower risk, right? Or more reward, same risk. So that is a Finiac type opportunity, right? It's a shorter time frame than we're really usually focused on. This is like a tradable event, but makes sense psychologically too. We're going into the holidays. People don't really want to be, downers. And there's kind of a buoyant overall crowd psychology. And you get a 3 times the reward there. Is that about right? A little more than 3 for essentially the same risk. So that's what I really like about it. And the strategy is basically buy in the beginning of Thanksgiving Monday, sell the next Monday. And if you're in for a short-term trade and you have some money, it's a better bet than the lottery.
Well played, sir. Well played. Did you find, and I'm not going to ask you too specific, but did this emerge in a specific vertical industry? Is this across the board?
Just the S&P 500.
Awesome. This is really, really cool. I enjoyed this whole read. So we'll make sure to link this in the newsletter or in the description.
Awesome.
Here's something else. Let me close these out for us. Over the last, I think our last meeting, 2 meetings ago, we talked about the tech space and just the slaughter that these guys are going through. I say these guys, I'm a part of this. I work with AWS, Azure, and so this is my, this is my sweet spot. These guys are getting crushed. We've talked about lots of these companies over the last few weeks. We talked about Stripe, we talked about Lyft, we talked about Zillow. I mentioned Bolt earlier in the year. In the last few weeks, or last week, we saw that Amazon has announced that they plan to cut 10,000 jobs from their organization. That's the largest cut in company history. It's going to be about 3% of their total workforce. Behind that, Meta is prepared to lay off 13% or has laid off 13% of their staff. That's after many years of consecutive growth. I'll show you this and then I'll ask my question. This is a cool website I found, layoffs.fyi. This tracks layoffs or firings within the tech space. And you can sort this thing by date to see the most recent layoffs and then how much of that workforce was laid off. And it's just, it's scary, man, to see the number of heads that are rolling and how quickly in the tech space. My question is, what in the hell is going on? Is this just an economy? Is this a ripple from just the chaos within the economy? And there's this inflation, all these different variables we're talking about. And does it just have an immediate impact on the tech space? Is this something to do with maybe over hiring and frothiness? Do you have any perspective into what's going on here, man?
Yeah. Technology companies lie. And they've lied about the value they can deliver. They've lied about the value they are delivering.
Mm.
It's my continuing theme today of the extraction economy. They're actually monetizing behavior modification. They're not monetizing the delivery of value in a transparent exchange of value between user and tech company.
Hmm.
They're collecting data, they're modifying behavior, their revenue models are not what they present to the public. So that's a lie. And I've said for years now, this idea of a metaverse and a digital economy as somehow a replacement for what has been, a transparent exchange of economic value for thousands of years, that helped people eat, have shelter, have decent jobs. It's a mirage. And it's not like tech doesn't have a place in our world, but it is not a new world. It's not going to, make irrelevant everything that humanity has been participating in for thousands of years now. But that's what they try to make us believe. And all the while, it's just about getting eyeballs and getting data and ultimately getting insights that nobody else has, and then manipulating your customers to just give you more. So that's not a sustainable model. I've been hammering on it for years now. And that's why it's crashing, because there's no there there, or there's not the there there that they say is there.
Yeah.
Okay. It's not going to work. Amazon, isn't going to take over the world. People need stores that they can go to. Local communities need stores that they can go to. We're not going to put it all into the hands of Amazon. There's got to be some kind of balanced relationship between tech and, pre-tech. So what's been going on, and then the way it all just exploded during COVID and these lockdowns, and this idea that somehow we were all literally going to be moving into the metaverse, it's just absurd. They deserve every bit of it. I don't think it's going to be ending soon. And just, reset from the world everybody thought we were going into 18 months ago. It's not going to happen.
A heavy amount of exposing has been going on. And yeah, we could probably spend the rest of the hour talking about the mental models behind a lot of what we've seen and how they're going to, I think I don't remember the exact stats, and I wish I had them in front of me. But Elon felt he's going to be able to get to the same outputs in Twitter with like some percent of their staff, and he's going to be able to get rid of.
You're right.
Yeah. Well, we're going to find out, aren't we? Yeah. You've hinted at this a couple times. Let me share this with you. We're talking about this synergy between tech and pre-tech and people and the chaos. We could, talking about we could spend the rest of the hour. I probably should have started, and we could have literally gone 60 minutes with this. They're gonna make a movie about this, man. This has been crazy.
How do you feel about it, Josh? I want to know, like you're sort of a windsock for me. How does it make you feel about crypto?
Yeah, I know that's how I want to. That's the question I want to get to for you as well.
Just
I'm
curious.
shook up,
What's your blink?
Yeah, I mean, to be totally transparent, I'm not out, but I'm shook up, and I've been on this sort of buy trip. I mean, as long as I can remember, and I'm sort of married to the calls and not the volatility or trying to make money week over week. And I've gone into that, but stuff like this scares the shit out of me, man. And when you find that bad apples are not only exist, but they're able to make their way to the top of an organization and play this type of, I'll use Ponzi scheme because I'm shooting from the hip here, but to have this type of smoke and mirror scheme on this big of a scale is it's very, very scary, especially in a world where we're talking about decentralization and there's this like we own the trust, and this was supposed to be a part of that. And the fact that this is happening in that ecosystem, it hasn't landed well with me. Yeah, I don't like it at all, man. I don't know. Are you comfortable sharing a little bit about what we're talking about here, just for the listeners that aren't aware of what happened? And if not, I have a brief timeline I can run down, but do you want to talk through this real quickly?
FTX collapsed. Sam Bankman-Fried, there may have been a short period of time where he was not a fraud, where he really had a system for making money in crypto in a hedge fund-like way, using arbitrage. And he thought he had a magic money machine, in the words of Ben Hunt. Ben Hunt wrote a great article about this. And there's lots of great articles about this. Matt Levine has written great articles. I just was reading one by Niall Ferguson, who's a financial historian that's over at Bloomberg. And so this is the classic fraud story of finance that's been going on for hundreds of years. And if anybody doesn't know about FTX, I don't think we really need to rehash the story here, because if you don't know about it, you're probably not interested in it. But the bottom line is that, millions of people who thought their crypto was safe were absolutely deluded and deceived, and the most encouraging thing to me is that most people seem to be actually taking personal responsibility for, like, wow, I was really foolish. I made a terrible mistake, and I'm probably going to really have to pay the price for that. Hopefully I won't do the same thing next time, but to me, what's so, like, I feel ashamed, I feel ashamed to be a part of a world that can produce this kind of criminal stupidity and deceit. It's so, that this young man, Sam Bankman-Fried, could be held up as a hero in our culture when it was so obvious that he was anything but. He's actually quite a troubled psychopath, and yet, was just elevated to dizzying heights of acclaim across the board. And that happens in our culture over and over again. And it's very upsetting. I don't think anybody should be taking this as this is the way capitalism works. No, this is not the way capitalism has to work. This is the way it has happened in history sometimes, but we can do better. And, like, lionizing somebody because they're playing a video game while they're pitching a VC firm and taking that as a sign of intelligence is just childish.
Yeah.
Right? It's childish. That is not a serious person. And yet that's exactly what happened at the highest levels of our venture capital infrastructure. The Sequoia Capital, one of the leading venture capital firms, just, gushed over a 20-something person playing a video game while pitching them. That level of, like, nonchalance was something to be, like, thrown, billions of dollars at. Right? While they're doing, like, amphetamines and, living 10 people in a penthouse in the Bahamas. Nobody could see this. None of these serious institutional players who are throwing money at him could see nobody did due diligence.
Scary, man.
It's crazy. Ben Carlson over at A Wealth of Common Sense wrote a great piece about the Match King, which was 100 years ago in 1929. I forget his name, Ivan something or other. He was from Sweden, I think, and built up a match, literally, a monopoly in the match business, like striking a match, not like Tinder matchmaking, right? But literally making matches. And got all kinds of political influence and a Rockefeller on his board, and everybody just, wanted to be close to him, wanted to be a part of him. And it was all a fraud. So, I never put my money into FTX. I would never touch FTX with a 10-foot pole. I didn't know it was as fraudulent as it was, but it's a foreign exchange, for God's sakes. Like, you don't have any recourse. You have no rights. And then, yeah, there's FTX.US that maybe it's kind of Coinbase-like, but even that turned out to be a canard, a distraction. And then the things he was doing about like rescuing BlockFi and rescuing Voyager and being the JP Morgan of the crypto space. Literally, Jim Cramer called him the JP Morgan of the crypto space. Okay. What he was doing was getting those companies, which weren't regulated crypto exchanges, okay, so that he could get their assets and borrow their assets to shore up the balance sheets that were having huge holes blown in them over at Alameda and FTX International. Okay. It's a scam at every level, man. It's such a scam. We can't even comprehend it.
Yeah.
So it was pure deceit, pure scam, condoned and endorsed at the highest levels of our leaders. Okay. Giving $40 million to the Democratic Party, and I think one of his colleagues giving, $30 million to the Republicans. I don't know the exact numbers. It's absolutely devastating. Makes me not even want to work in this industry. And I'm not really seeing the industry have a, looking at ourselves moment here, right? That's what really needs to happen. How did we let this happen? Like, not what's going on in the head of Sam Bankman-Fried. How did we let this happen on our watch?
Yeah.
Right. That would be some really encouraging journalism there.
Yeah. Yeah. To get to that scale, right? To your point, I could have and should have done my due diligence, but when they're at the scale where these giant firms are coming in and investing millions and millions of dollars, you'd expect them to be doing their due diligence with smart people, and come in and kick tires and shake trees and find where's this thing loose. And the fact that they were able to get to this scale is, as you're talking through this, man, I've gotten chill bumps 3 or 4 times. I said this in the beginning. This has the storyline of a movie. Like they'll pull this together for sure.
Of course, they'll make a movie out of it, and that we should boycott it.
Yeah. You talked about the unfat.
Enough.
We can't even fathom the scale of it. I'll just give one stat and then I'll move on. November 6th, Binance, which is the world's largest exchange, announced that they were going to sell all of their FTT tokens. FTT tokens is what FTX, the FTX token, what they created. So Binance announced they're going to sell all of their FTT tokens, and in quotes, they put due to recent revelations. And at that moment, the investor crypto community was like, what in the hell is this? And everyone started trying to dump it. In a 3-day period, November 6th, 7th, 8th, more than $6 billion were tried to transact in FTT, which put them in a real liquidity crunch. But it's just crazy that the scale.
This is not DeFi, okay? This is a centralization by Sam Bankman-Fried that he controlled, okay? If crypto is ever going to amount to anything, it's got to get past this trading mentality that makes a company like FTX be able to do what it did. That's not why crypto was created, so that a company could be basically an exchange that facilitates trading and financial manias and profits from them, like Robinhood does, here. That's not going to be a sustainable model. We will just come back here again. We have to get past this as the definition of crypto, because this is not the definition of crypto as initially conceived and as most people believe it's what it's supposed to be about. This is about financial fraud being, facilitated and perpetrated by the centralization of assets, people basically abdicating the very basic idea of what crypto is supposed to be about in the first place, which is, like personal sovereignty, digital sovereignty, control over your assets, no intermediary. And you're like, no intermediary. Let me just give it all to this kid in the Bahamas because I trust him. He's a good guy. God, he's, he voted for the Democrats and gave him money, and he's like funding research for the pandemic and promoting vaccines, and he's an effective altruist, whatever that is. And who cares about this disintermediation, this personal control? Let's just throw it all in the pocket of Sam Bankman-Fried. And our venture capital companies are like, yeah, go Sam, go. That's a boy, Sam. Here's some more money. Here's another 100 million. Here's another 200 million. It's absolutely insane. We have to get past it. There's nothing there, nothing but fraud and deceit.
Here's and I've got, give me one more question. A company, maybe at this point, who knows what's going on, but I'm going to say I'd expect these guys to not have any fraud and deceit. Let me share my screen. There's one more little bullet I'll hit on and then we'll get out of here. Do you have time to talk about TSMC real quick?
Sure.
Okay.
What, a real company?
Yeah. I'll pivot.
They actually make stuff?
Yeah.
Whoa.
Let me
I didn't know these still existed.
I know, man.
I thought we were all just going to be buying and selling memes for the rest of our lives.
Yeah, unfortunately not. That's
fortunately not.
Yeah, fortunately. Let me at least tee up why we're talking about this, and then I'll kick it over to you. I think my goal here, I'd like to have you maybe even unpack this in your app and give us a little supportive data. But and when I interviewed you on my podcast a couple of years ago, which is how we were introduced, you had several one-liners that stuck out. But the one that I quote, probably on a weekly basis, more often than you or I are comfortable talking about, is you said this line that on the pre-call and on the interview, and you said, Warren Buffett works for me. And that stuck out like a sore thumb to me. And I appreciated what, obviously he's not on your payroll, but the point is like, right, the stock market, there's such a dense pool of tickers to go look for. Don't start at the bottom and go find your own, but at least have guys like Buffett or someone that you connect with do the first sniff of these tickers, and then you can go to their pool and start to find which ones you connect with. But Warren Buffett was doing the first, his due diligence, and his team was doing their due diligence on your behalf. And then you can go into his portfolio and do your plucking. Mm-hmm. Last Monday, Buffett announced that Berkshire Hathaway in the last few months has put in $4.1 billion into TSMC. And TSMC here, this is a Taiwan semiconductor manufacturing company. These guys make they're a Taiwanese chip maker. And like I said, I'd like to see this in your app, and maybe you just give us a little supportive data. And is this interesting to you? Have you looked at it at all? But I think more importantly, or while you're pulling that up, I just wanted to show maybe a supportive piece of another argument you've had. And in the last couple of weeks, last couple of months, throughout the year, probably, this year, you've been talking about have powder dry. You need to have powder dry. This shows Berkshire Hathaway's cash on hand and what they've been doing since 2000. Since 2000. And currently, these guys have $109 billion in cash on hand. You can see on the right, this is a sick graphic. Here on the far right, this is the enterprise value of all the entities they could go buy in their entirety with that 108. Lyft, Spotify, Lululemon, Peloton, Snap, Domino's, Manchester United, the soccer team down at the bottom, at 44 billion, they could do 2 Twitters. So a lot of money on hand here. I appreciated this. You need to have powder dry. You've been echoing it. When smart people are doing something, you've been screaming this from the rooftop. Buffett has come in and screamed this from the rooftop. He showed his report. I think my question here, man, is have you had the chance to look at this at all? And if so, you have any feedback on this TSMC, what it looks like in the app? Have you done any homework yourself?
I haven't done a lot of homework on it, but I think it's a great move by Buffett. The company's obviously been hit hard, and there's uncertainties about China and Taiwan, invading Taiwan, et cetera. But this is a classic Buffett play. These guys are the dominant force in semiconductor manufacturing. Everybody needs their stuff. It's like buying Apple 5 years ago. And I think it's a great play. I mean, if I look at it in the app, we can pull it up.
That'd be awesome.
Really, let me just see here. All right. All right, can you see that?
Yes, sir, I can.
So, I mean, what this is just looking at TSM through the lens of risk management right now. So, their risk efficiency is negative right now. They've been going down in price. Okay, if we look over here, we can see it a little more clearly. The blue line here is Taiwan Semiconductor. It's actually down, similar amount, if not more, than the other indices like the S&P 500, et cetera. We'll leave the NASDAQ on here because that's what we can compare against. And its D score, which is basically what you should expect your worst day of the month to be, is actually higher than the NASDAQ, right? So it's more volatile than the NASDAQ itself.
Mm-hmm.
And it's been going down, it's in price, like more risk for less reward, okay? That doesn't mean that we're not at a turning point, right? We could be, but the trend in terms of reward for the risk you take has been going down. That's
Yes,
a caution, okay? And, overall, its D score is higher than the NASDAQ, which means it's more volatile than the NASDAQ. So going back to the overview, the D score was like 4%. So you should expect a 4%, up or down day in TSM at least once a month if you're looking at daily data. This is its histogram, so it's pretty spread out. You got regularly days that are plus or minus 5%. It is somewhat bell curve like with a little spike here at minus 2%. So a lot of days have been minus 2%. So ultimately, this is a stock that's more volatile than your typical stock. It hasn't been paying good rewards for the risk exposure. The other thing I might look at is, let me see if I can pull this up.
While you're doing that, I'd encourage, those that this app is live. You navigate around it like a savage, like a ninja. This app is live. Folks can download it and play with it, build your own portfolio and all of that. It'd be interesting. You see the single asset as a line item. It'd also be interesting as people play with this and think about, wait, Buffett just put $4 billion in this. Should I be looking at it? To add this to your own portfolio and see the impact it has on the overall D score and risk efficiency and what that does to your entire portfolio. Go ahead, Richard. Sorry.
So here is, this is actually just a sort of dummy portfolio that has the different sector spiders of the S&P 500 broken down into different groups, right? So I'm going to now add this stock to this portfolio. My spider ETFs portfolio. I like to do this because not so much to see how it impacts this portfolio, but to ultimately see like what is this asset most highly correlated to and what's it uncorrelated to. Okay. So, I still have UNG in here, which is natural gas, right? So that kind of stands out that Taiwan Semiconductor is very uncorrelated to natural gas. That's interesting, right? So I'm kind of interested in natural gas. I think that it's come down a lot, and I think that energy is generally going to be a strong sector. We can also see relative, so If we look at where it's most highly correlated, XLY here at 67%. And of course, it's most highly correlated to itself. So XLY is the consumer discretionary sector. That's interesting. Again, I think what we're helping people do here is, one, understand the riskiness, the volatility, the exposure, right? And then how do you put together a portfolio that has complementary bets that overall, reduce your risk, because you're getting what I call risk compression, okay? When your bets are uncorrelated, you essentially get free risk to spend, because investing is about spending risk to earn reward. Okay. And when you have complementary, uncorrelated, diversified, whatever you want to call it, bets, you get free risk. It reduces your risk without reducing your reward. Right. So that's what you want. And so it's just interesting to look, XLK, which is the technology, 71% correlation. That's high. So XLP is relatively low, XLU, which is utilities, and XLE, which is energy, and very low correlation to natural gas. So that's the way that I would like people to ultimately be using this, right? Yeah. So Buffett just made a big investment in TSM. Let's let Buffett work for us. Love it. How could TSM complement my existing portfolio? Is it a good fit, or is it just completely the same type of bet as all my other bets, right? Or is there some other bet that I could add together with TSM to get me some free risk? So looks interesting.
It's awesome, man. That's exactly what I was hoping, looking for, and all of that. So thank you for flashing at that. Anytime I look at that, man, I can feel myself getting energized, especially you're able to navigate it so damn well.
Well, there's a lot more to come, but I think we're making good progress. And I think already it's something that's most people don't have access to, and that we're able to give access to it in a relatively accessible way. There's still a learning curve because people just don't think in this way, but it is the right way to think. It's the way that the professionals think. It's the way the institutions think. And if you want to be successful, it's the way you need to think too.
There's two questions I'll put on the couch for next time, man. I think this is probably a pretty good place to close shop. It is Thanksgiving week, so to the listeners, hope you all have great time, friends, family. I'm sending everyone the best of vibes. Richard, you as well, man. Really appreciate you allowing me to be a part of this. This is fantastic.
Thank you, Josh, and I hope everybody gets together in person this Thanksgiving, if at all possible. Let's let's step out of our digital reality for a little while and remember the analog.
I'll talk to you in a couple of weeks, man. Thank you very much.
All right. Thank you, Josh. Take care.
Cheers.